Hey everyone, Steve here from theturtlefollower.com, and this is the stock market outlook video for July 6th, 2015. I'm actually recording this on July 4th, so I hope everyone has a great holiday weekend, safe out there, and gets ready for the week that we're going to have next week at the market. This past week started out a little rough with the news out of Greece, potentially defaulting, and all the headwinds that come along with that. So we had a huge gap down on Monday in the futures. We're looking at the S&P futures here. A huge gap down, but we stabilized on Tuesday and Wednesday. Thursday was down slightly, and Friday, the little bit that the futures traded, they were down slightly as well, down 1.75 points. What I look at with this is we came right into a pretty significant support area. All right, that 2060 area. We did close below it on Monday, but we quickly recaptured it the following day. So now we're back above 2060 in the futures, and I think that's very important. I think that gives us a little bit of a basis and a little bit of a line in the sand reference moving forward. So now if we know that we start breaking down below, say, 2046, which was the lows of Tuesday and Monday, then we have an issue at our hands, and we're probably going to test 2036. Personally, I think that's what happens. I do think we end up testing that level, but again, just understand that we are still in a consolidation. If we get rid of this trend line right here, because it's really not doing much anymore, we are still in a consolidation in a range. Okay, and whether you want that range to be from 2125 to 2060, or it can even go from 2125 to 2036. All right, either one is valid, and until these levels start to break, you have to just assume sideways to higher is, or I shouldn't say sideways to higher. You have to assume sideways is the the trend of choice at this point. Obviously probably trending a little bit lower, but as I said, until we start breaking 2060 or even 2036, just assume that these areas are going to get bought, as they have so many other times. All right, you come down into support, it gets bought. Come down into support, it gets bought. Now, if we started maybe testing 2036, then the trend starts to shift. All right, then we're looking at maybe sideways to down as the preferred way. But the one thing I want to point out is if you look here on the weekly chart, the 200-day moving average has been significant support in the past. Okay, you go all the way back here to 2012. All right, we tested the 200-day twice. We never tested it during 2013. We tested it once in 2014, and if you want to call that a test here in February, you can call that. But now we're pretty much at it. Okay, we're a little bit lower. That 2040, 2036 area really represents the 200-day moving average. So the one thing that you guys know from following me and the way I look at my trades and everything, think of the 200-day moving average as the 50-day. All right, and think of this weekly chart, consolidating right into allowing that 200-day moving average to catch up, looking for a bounce off of that, and maybe a retest of the highs and a potential breakout. So this could be setting up in one of two ways. It could be setting up that everything fails and we just start breaking down left and right, or what I'm more inclined to think is this is setting up as a great entry point, okay, for us, because look at how close we are to new highs and the 200-day moving average. All right, very tight range on the weekly chart. All right, we'll zoom it in a little bit. Extremely tight range, and again, this could very well be the springboard that we need to push out of this range and eventually take it to new highs. So that's the way I'm kind of looking at it. Again, it's kind of hard to be overly bearish considering the trend that the market's been in for the past 2-3 years. But at some point, the trend's going to end, and we know that. I don't know if it's now or not. I think they had every opportunity to continue taking it lower after the Greek news on Monday. They didn't. So I just tend to think at this point, until those levels start to break, we're not really seeing too much in the way of technical degradation as far as where the trend is really showing maybe some ending of the upward movement that's had. So that's the way I'm looking at the market as a whole. We'll go through the other 3 indices real quick, but overall, you guys know I really just kind of like to look at the S&P. We'll look at the NASDAQ here, and again, you can see holding this level here, 43.83. Again, it's come into this level so many times in the past that it's surprising. It would be surprising to me not to think that this gets bought and back up to the highs. All right, so I'm just looking at it the same way as I am the S&P. And again, the longer we go sideways here, the more that this 200-day moving average catches up, and the more influence it has. And again, looking here, there's only a couple touches of that 200-day moving average on the NASDAQ, and they've all led to higher prices. All right, so again, just keep everything in perspective, and the world necessarily isn't ending. Just understand that we're going through a bit of a rough patch, but it could be very well be setting up for a nice continued move higher. And maybe this is the test of the 200-day that leads us to another 2 years of upside momentum. I don't know that for sure, but again, just nice to be able to look at a chart and not have to have an opinion. Just identify the trend and identify key support areas. Here, the Dow. Right, the Dow has touched the 200-day many more times than any of the other indices. All right, so not surprising to see it touch again right here. But again, look at what has happened. 200-day rally, 200-day rally, 200-day rally. All right, every touch has led to a rally. And again, nothing to make me think at this point that may not happen again. Now, obviously, you start breaking down below 1753, then you're breaking out of this pretty significant range in the Dow. Your next level of support would be down here at 17,100 in this area. Wrong tool. But again, until that starts to happen, you just have to assume that, again, we're going sideways for the most part. All right, and the final one, the Russell. Russell was breaking out. Now appears that maybe that's not happening. Maybe now looking at maybe a false breakout, but again, right back into the range. Okay, so we had this couple days of looks like it may lead us higher, and sure enough, sold right into. And now you have some key support areas here, 1231. You have another one down here at 1200. So you have a lot of areas that should hold. And again, looking at the Russell from a longer term perspective, I think that the breakout from this long-term weekly consolidation, almost a year and a half, isn't going to necessarily fail on the first try. So, here, yes, we had a little bit of a failure out of this smaller range, but ultimately, trend is higher in the Russell. And you have a lot of people that are looking here saying, hey, you know what, Russell comes back into that 1200 area. I want to be a buyer because I didn't get my full position on when I first entered. So you got to think about how other people think. You got to think about the psychology. You may be looking at it one way, but understand that may not be the way that the majority looks at something. Again, if you're long something and you're a fund manager, you're not buying breakouts necessarily. You're buying pullbacks, and you're buying value. And people may look at the Russell and the Dow and the S&P and the NASDAQ at the 200-day is value to them, and at that point they're going to start loading the boat. So that's the way I'm looking at it this week. Again, I'm looking at it potentially going sideways for the majority of the week. Looking at those key areas of support, and if they don't hold, then obviously we have to reevaluate our situation. But I do believe that they hold. I do believe they get tested. And don't be surprised to see a move below it and then a quick reversal to the upside. So a big V-shaped reversal, a big hammer, similar to, I think I saw it on the NASDAQ. And it's similar to, let's see if I can find the specific bar that I was looking at. Similar to this in here. So where you have this big move lower, all right, so you gap down, you continue lower, and then all of a sudden it reverses and you close higher on the day, and that leads you higher. So I have a feeling that's the type of move that we're going to see, similar to this one and this one. But again, that's undetermined at this point. Just understand what to look for, understand where to look for it, and then you'll be in a better spot. So hope that helps you guys. Any questions or comments, please let me know in the comment section below the videos on the website. And if this is the first time you're joining us, head on over to the website, put in your email address to get on the nightly recap, and you'll get all future videos sent directly to your inbox. Trade ideas, stock market outlooks, anything that I feel is pertinent at the time. I usually put a video out. So I would love it if you went over there and put in your email address, signed up, and join us. All right. Other than that, have a great rest of the holiday weekend, and we'll catch you on Monday. Take care.